Thank you for checking out crypto.chartguys.com, the source for technical analysis in the cryptocurrency world. We are proud to announce our own crypto alert system designed to give you the most critical technical trading information possible no matter where you are. Keep your eyes on the market with mobile or email alerts for MACD crosses, RSI levels, and even inside bar alerts for dozens of coins across multiple exchanges. New features and proprietary ChartGuys indicators are already in development. Our alert system is very easy to customize and utilize, so don't hesitate to sign up for the most effective crypto trading tool on the market at crypto.chartguys.com. Hello everyone, lots to talk about today, and I do sound different because I'm on a different mic and currently not home, but a couple things that I want to point out, and actually a lot I want to talk about in this video. First thing I want to start off with is the fact that we are in an environment right now where bearish news is outweighing bullish news. It's not significant bearish news, but it is piling up in a way that is keeping the markets pretty contained, and we're not seeing any big breakouts. And it's just article after article on different subjects. And again, neither one of these individually on its own is a very big deal, but they're just adding up to have a little bit of bearish sentiment on the space. So the SEC slamming the brakes on Bitcoin ETF products and crypto mutual funds is definitely a big hit. If you've been watching this video, you've been hearing us talk about this for the last couple months, where this is a major catalyst that we would be looking for, along with something like Amazon or major names accepting cryptocurrency. And now that this is off the table for a little bit, the SEC is saying, that there's not enough liquidity and things like that, where originally people were saying that the futures being listed for Bitcoin were going to make it accessible to now have ETFs, and the SEC is saying that's not really the case. So any, early pricing in of this market, anticipating some SEC, or I should say some ETF products coming in, now that's not going to happen anytime soon. So that's definitely the most bearish news that I've come across in the past couple days. We have Metropolitan Bank halts all cryptocurrency related wire transfers. Again, not a huge deal, but definitely worth noting. We have South Korea announces crypto traders could face fines under the new system. And that's, of course, crypto traders that are not following their rules and not going from anonymous accounts to accounts that are verified by their ID, because obviously the governments want their taxes on these cryptocurrencies. Another one, Capital One has banned cryptocurrency. And really, it's just because people are stealing credit cards and buying Bitcoin and then obviously committing fraud. But this, I feel, is a good thing. I don't think you should be able to buy cryptocurrency on credit. I know it worked out for a lot of people. I know personally people that it worked out for on the way up, and that's great. Congratulations. But for every person that it worked out for, I guarantee you that there are people getting in significant financial trouble because they are buying with credit, buying up near the top, and now they are down. I promise you there's someone that bought Bitcoin at 1900 on credit, and they are now in a situation that is very, very scary for them. So I never would ever suggest buying a cryptocurrency, the most volatile economic trading vehicle that you can buy, on credit. It is very high risk, high reward, and to do that without your own money is just a disaster waiting to happen. So the bottom line is, again, just some articles that are leading to some bearish action and not really allowing the bulls to take over. So other things I want to talk about, of course, the free course picked our winner there. So I appreciate all the comments. Those comments really are a significant motivator for me, and the reason why I'm sitting here on my knees in the hotel room on vacation putting out this video, because I really do appreciate everybody sharing how much they appreciate these videos and how much they help and things like that. So we picked the free winner, and we're going to keep doing that because, again, I like to hear from you all, and certainly very motivating to continue putting out content. So a couple things I want to talk about, and then we'll get into the technical analysis as usual of the major names, and we're going to look at NEO as well, which is hitting all-time highs. So we're in a different environment, and if you've been watching these videos, I've said this a few times. Now is the game plan to buy on consolidation rather than buy bull breaks. We used to be able to buy bull breaks, and the entire market would do it, and we would see 5 to 10% breaks in a matter of hours. We don't have that environment anymore, and it's very important to be a successful trader. You have to be able to recognize shifts in the markets and be able to react to them. And if I had to list, my qualities, what makes me a successful trader, what are my best traits, discipline would be up there, and number 2 or number 3 would be ability to react and pivot in different market environments. And that's what allowed me to get into cryptocurrency in the first place. It was completely new to me at that time, and I had just started my research. And to see the opportunity, and of course, knowing technical analysis and being very comfortable looking at a chart makes me very comfortable in any market. If there's a chart on it, I am very comfortable trading it. But being able to, just complete 180, turn things around and say, well, here's an opportunity. I'm going to take a bunch of money from my stock trading account and put it in this new cryptocurrency thing and see what's up over here. And just being able to do that, again, Canadian MJ, all these new markets that are providing all this hype and bullish action, being able to jump right into that and be comfortable and know that your risk to reward ratio and your risk tolerance is going to be fine because you are very used to these kind of things in terms of, not getting over your head and things like that. It's very easy to transfer from one thing to another. I had never traded blockchain stocks before. I saw they started breaking out and I started trading blockchain stocks. Same thing with, years ago when I started trading gold miners. I had never traded gold or anything related to it before, but seeing, bullish action in gold had me explore that new market. So the bottom line is we are in a different environment where it favors buying on consolidation, whatever time frame that's on. If you're a day trader, it's a shorter term time frame. If you're a swing trader, it's a longer term time frame. What that does is all about risk to reward. If you are entering on a bull break, oftentimes the nearest support is a significant ways away. So if we see a bull break and we don't get any follow through behind it, you then find yourself in a situation where you're saying, okay, there's no support nearby. We did make a bull break, but we're pulling back and all. Just like that, I'm in the red. And the risk to reward favors risk a lot more because of the distance you have to go before you encounter a support level. Whereas if you're buying on consolidation, you're buying near a support level. Here's just an example right now. Let's use this example of consolidation on Bitcoin's daily chart. So we're approaching a key support level. So if I were to enter, down in the low 1300s, I know my stop needs to be below 1280. If I were to enter, let's say we had made a bull break over 15,000 yesterday on this candlestick. Obviously that didn't happen, but if that had happened, here as a swing trader on the daily time frame, support is still down at 12,800 and we have no support nearby. So if I enter on a bull break of 15,000 and the next thing you know, we start fading back down into the mid 14,000s, I'm in the red and there's no support nearby. That is not an ideal risk to reward scenario. If you are buying on consolidation, your stop level and clear support level are going to be closer nearby. And again, due to the inability of the bulls to see significant bull breaks and follow through, obviously ETH, was the star of the show a couple weeks ago doing that. But I'm speaking just in general with Bitcoin and Litecoin. Generally, the market right now does not favor buying into bullish breaks. It favors buying into consolidation. So I want to talk a little bit about the thumbnail. The thumbnail of this video saying, profits a day, keep the job away. So my trading style, and everybody has a different trading style. There is no, one size fits all. So I'm not saying everybody should be doing this. I'm saying this is what works for me, and this is what works for other people. And for me, it is locking in profit every day. Some people have a goal of accruing as much Bitcoin as possible. That's not my goal. We have run too far, too fast all of 2017 for me to be comfortable. I'm not convinced that we couldn't pull back to, 7,000 in Bitcoin. I don't think it's very likely, but it is entirely possible because of the magnitude of the move that we have seen. So what I am doing in my game plan is to lock in profit every day. If I lock in profit every day and I have a green day every day, then I'm going to be just fine. And that's all that I need. I don't have to make all the money. It is completely giving up on FOMO in that instance. So you look at Ethereum on the daily time frame, and on this run for Ethereum, we essentially went from 750 up to 1,387, almost 1,400. I was trading this very often, but I missed, if I had held, I would have made hundreds of dollars more, but that's not the style that I was using. And I was absolutely fine leaving money on the table to be protective. And what I was doing is locking in profit every day or every other day. And, if I continue to do that, my account only grows. And then I miss the pullbacks and I'm not seeing my account pull back. So with my trading style, I am very rarely giving anything back. And my biggest losses will only be the size of a successful trade that I can make back with one bull trade. I'll never get, a loss. Oh, I just gave back a month worth of profits. That'll never happen to me due to stop losses. Again, I know a lot of people don't like stop losses for that reason, but I will always be using stop losses because they keep my risk to reward scenario in my favor. So like I said, for this move, I was locking in profit and missing hundreds of dollars to the upside, but every single day my account is growing. I'm having, bigger and bigger gains every single day, and especially if you compound profit, that will be the case. But it all depends. You need to determine, what is your goal in this market. Are you trying to accrue as many Bitcoin as possible? Are you trying to make as much money as possible? I don't even have that goal. My goal is not to make as much money as possible. If it was, I would literally be on my computer for 15 hours a day, and it would run my life, because I know that if I walk away from the computer, I miss opportunity. That's not the case. If I lock in, $1,000 of profit, that's a great day, and I don't need to sit there and try and say, well, I could have, 1,200. So with my trading style, it really is completely giving away FOMO. It doesn't exist for me. If I lock in profit, I'm good, and I'll do it again tomorrow, and my account will continue to go up day after day. So just wanted to point that out just in terms of my trading strategy and style. Of course, I'm shorter term and a day trader. And if you have, if you're a swing trader, you're using different levels, of course. You're using the daily and the weekly time frame for your levels for stop losses or for when to take profit. And if you're a long-term trader, you're not doing anything. So I do have long-term positions that I am holding on to, and my general guideline, well, not a guideline, my set in stone rule is I am not touching those long positions until 2020 at the earliest. So every time I see, wow, Ethereum's up at 1,400, should I take some profit? I look at the date and I say, oh, it's 2018. The answer is no. And that's just sticking to my rules and sticking to my game plan. Could I give up a significant amount over the next 2 years? Yes, absolutely. But that is a risk that I have already factored into my game plan, and I am taking that. And just want to note that my long-term positions are about 10% of what my trading capital is, so it's very insignificant comparatively. But just want to point out that I do have long positions, and I am not wavering in my game plan, because it's very easy for me to just look at the year and say, nope, I set a game plan. 2020 is when I'm going to start considering potentially selling long-term positions, and if it's not there, if we're not at that date, then I am not considering selling any of these positions. So let's see, let's get into some technical analysis. One more point. So I pointed out many times the comparisons to Canadian MJ. And I've also said many times that we are in such a bullish environment for cryptocurrencies that, there's going to be a time when things get very boring, and we could see multiple months of pullback. That doesn't mean there's going to not be bounces on the way. There will be bounces on the way down. But, we could very easily find ourselves in March and down at $7,000. So we have to prepare for that scenario. Number one, in the sense, I already hear people saying, wow, it's been a really boring week. But if you see the percentage gains that these cryptocurrencies are still making, if coming from the stock market, you just have to laugh and say, man, you guys don't even know what's coming. If, you're getting bored already, this is still an extremely volatile market compared to normal trading instruments like stocks or like gold or the dollar or things like that. And if you are coming up and learning technical analysis only in this environment, you're in for a rude awakening when this does shift, as it is already shifting. So we have to be prepared to trade less under unfavorable conditions. If we are in choppy action and we're not seeing blue sky breakout after blue sky breakout, we are trading way less. And when we're trading way less, it might seem like it's boring, but this is a beautiful opportunity to learn and to study and to make that your top priority. Switch from trying to make, gains, and switch to I want to learn so that I'm more prepared years down the road. Again, I had 7 years of preparation for this cryptocurrency market that allowed me to hit the ground running and smash this market with a lot of success, because I had all this education, 7 years of education backed up behind me, ready to go. So just want to point out very quickly what happened with the Canadian MJ space, because I pointed this out before. We had a crazy breakout. We then consolidated long term. And while that consolidation was going on long term, we had the same thing. We had a ton of members come in due to all the hype and activity on this run. So here was WEED, where we went from essentially $2 up to $14, a $700 move in just a span of about 4 months. So everybody has money growing on trees and, doing really well. And then we start to consolidate, and look at the consolidation that lasted for about 6 months all summer. While this was going on, people in the chat room scaled back. They traded less. They went all cash and protected their positions. And they studied and they learned and they asked questions and they watched videos. They went through the courses, watched the courses. We have people watching the courses multiple times. They're taking notes on those courses. They're saying, wow, I'm really struggling with stop losses. I'm going to learn about stop losses. I'm going to take notes. I'm going to go and dive into subjects that I need some further education on, and go out into the world of YouTube or Google and find that information so I can be more prepared in the future. So the traders that did that while they were learning here, They were ready to smash the cryptocurrency opportunity, which they did, and they're ready to smash this bull break once the bull showed back up into the Canadian MJ sector. So they were preparing and doing their homework, and they were twice the trader that they were on the initial run-up than they were on the second run-up. So they were much more prepared. They did much better, and that is a scenario that we may find ourselves in with cryptocurrency if we have, consolidation and a lack of bullish activity. That is a great opportunity to hit the books and learn and prepare. Again, this is a marathon, not a sprint. We are looking 10, 20, 30 years down the road. Imagine you're 60 years old and you're getting ready for retirement. I know plenty of people that are getting ready for retirement, and it's a bit scary because there is no more income after that, unless it's passive income from dividends or whatever, depending on how you have gotten ready for retirement. I personally am never going to have any fear with retirement, because if I need to create some income, I will trade and do so. So if you have that confidence, it is a complete game changer for your entire life. And again, we're in such a short window. Cryptocurrency has been booming in this crazy hype market for about a year, and I'm talking 10, 20, 30 years down the line. So study and prepare yourself to be able to thrive in any market condition. So let's get into some technical analysis now, and we'll start with the big three. Bitcoin first on the weekly time frame. This is healthy consolidation. We saw a huge run up. This is a potential bull flag pattern that we are currently in, but we could consolidate back down towards 11,000, 10,000 and still be in a bull flag. So a bull flag pattern is when you have a significant breakout and then you see consolidation. And I got this magnet on here. And by the way, if you want your lines to snap right to key levels, thanks to people for pointing this out to me, this magnet icon here on the left of TradingView is very beneficial, but you want to take it off for if you're going to be doing your own drawing like this. So this is a bull flag channel on the weekly time frame right now, and we could stay in this for another 4 weeks. So keep an eye on this healthy consolidation. I call this healthy because it's nice and contained. We don't have any huge bear volume. Look at the bull volume on the way up. It is far outweighing the bear volume on the way down. If we were to see a spike in bear volume and a break of 10,400, that would change things for me. Then it would no longer be a bull flag. But at this point, the weekly chart is a bull flag of healthy consolidation. Checking in on the daily time frame where we stand right now, we have a pretty important support level being tested multiple times. And we can see we had our higher low, higher high. We had the FUD ruin a lot of the bull momentum. We had a bounce attempt here, and it's just another lower high on this daily time frame. So our most recent resistance is this top at 14,500. And the must-hold support level, we have two, 12,800 and 12,500. These two lines are our must-hold support levels. If those levels break, it is definitely a red flag that the trend is being lost on the daily chart, and then we would look for that weekly chart to continue forming that bull flag pattern and head down towards the $11,000 range. And then again, if we break 10,400, the weekly bull flag goes out the window, and we need to be a lot more cautious because we could pull back 8,000, 7,000, who knows? I'm not ruling anything out. Whether you're bullish on Bitcoin and blockchain, that doesn't matter. I am absolutely bullish on blockchain technology and the cryptocurrency space, but I'm also realizing how fast we ran and what markets do in normal environments, and that's consolidate and get back significant percentages of the breakouts when you go up extremely fast. So we could pull back on this weekly chart down towards in the $7,000 range and still be forming a higher low compared to the last clear consolidation of 5,511 if we do break this $10,400 level. So again, just giving words of caution, as anything is possible. We could run to 25,000 or we could go back to 7,000, and we have to be prepared with game plans in any scenario. So back to the daily time frame, the bears are in control and the bulls are trying to form yet another higher low. Bulls need to hold 12,800. We just bounced off of 13,110, and the bulls now need to break over 14,500 to break this lower high pattern and have the bulls regain control on the daily time frame with a bullish MACD cross and make our way back towards the high that we saw on this recovery of 17,000. So at this point, most important levels on the daily time frame are 12.8 and 12.5, and the key resistance is 14.5. So zooming in, we have the 4-hour time frame. We can see a pullback. The bull's trying to bounce. It's not a convincing bounce. We have an inside bar forming, so multiple 4-hour inside bars to be watching on Bitcoin. And the hourly time frame, we can see we're still forming lower highs on the bounces. We had an hourly oversold bounce, decent bounce following through, but until we break the lower high pattern on the hourly and see this bullish MACD cross follow through, We have to break 13,645. Until we break that pattern, the bears have complete control on the 4-hour, the hourly, and the daily time frame. It has to start with a bull break on the hourly, a bull break of the inside bars on the 4-hour time frame, and then that daily chart breaking 14,500 to break the lower high pattern there as well. So checking in on Ethereum, actually let's go to Litecoin because it's very similar. Litecoin had a little bit more bullish action due to the lack of resistance, a little bit less liquid, so the bulls can run it easier just like it can dump easier. And we saw the bulls hold a support level here of 219.07. I should say create a support level. Look at this inside bar break bullish on the daily time frame. 242 broke bullish and we ran up to 263. So that was essentially an 8% move to the upside on that inside bar bull break on the daily time frame. So nice follow through there. And we actually made it all the way up to 268 before we started consolidating. Now the bulls have to form a higher low compared to $219.07 and then break the top of this move of $268. That is now our key resistance. So it's very similar to Bitcoin. There are some slight differences, but we have the bulls attempting a higher low and they have to break the high of the bounce of yesterday. Pretty similar in that regard. And the correlation is still there. Litecoin did break that correlation. Certainly looked like it was news related with the way that the volume was coming in. But look at how we gave it all right back. Or we didn't give it all right back, but we gave a significant amount right back. Bearish reversal, shooting star on the 4-hour time frame, confirmed. And we saw a pullback now with support down at our low of 233.82. 4-hour inside bars, very similar to Bitcoin. And we're going to look for a break of these 4-hour inside bars. And I look at the hourly and see that the bulls need to break the lower high pattern, 243.99. 243.80. It's essentially a double top right there. Bulls have to break that level while holding the recent low of 233.82. Very similar setup for Bitcoin and Litecoin with the 4-hour inside bars forming. Ethereum is a completely different setup because it went on the crazy bull run. Very surprising that the bulls were able to head to a higher high here on this bounce, but some nice profit opportunity. Inside bar bull break. The daily inside bar broke bullish at 12.85. Next thing you know, we're up at 14.20. That is a $125 move, and that is about 8 to 9%. So both Ethereum and Litecoin on their daily time frames at different times, giving a 8 to 9% move on the daily inside bar signal. This was a little bull flag. This was healthy consolidation that was not prolonged and now saw follow through. And you can see a similar pattern to what I drew on Bitcoin. Bitcoin on the weekly is a little bit more drawn out, and Ethereum only lasted 2 days before the continuation. This is now the must-hold daily level to keep the bulls in control. That's $10,084. Resistance is the all-time high at $14,020, and that's the range that we currently find ourselves in. The 4-hour time frame, we can see the pullback. The bulls are looking to form a higher low on the 4-hour, which currently is down here at 12.56, so that's an important level in the short term. And the hourly chart is looking for the bulls to change the trend from lower highs and lower lows to a higher low and a higher high. So right now resistance is $1,338 and $1,347. Also want to point out these EMAs, the exponential moving averages that I've been highlighting. And I have another chart here on Ethereum where I want to point out some of my trades that I'm going to do here at the end just to give some insight. But I have those moving averages here on this hourly time frame. And look at the rejections. Every single bounce attempt on this hourly time frame is rejecting from these exponential moving averages right now. If we can regain them as support, we will look for bulls to take over. Remember last video I highlighted rejection, rejection. They became support. Then we formed a higher low and a higher high. The bull cross occurred right when we got that higher high, and then we held it as support on the bull run. So if the bulls can get back over those levels and start to hold them as support and make their way back towards the all-time high, that will definitely be a bullish indication. And again, I use the 12 and the 26 period EMAs because I have been watching them on GDAX. And if you trade on GDAX, you are forced to watch these moving averages at this point. And I do believe that because so many people are forced to watch them, that these lines do have a bigger impact as almost a self-fulfilling prophecy, forcing people to watch a certain thing. So let's look at my trades on Ethereum, and then we'll look at NEO here. Just want to give some insight into my mindset. Last video that I did, I highlighted that I had just made a bullish entry in Ethereum that morning, which was yesterday morning, at 13,400 roughly. So I made my entry, and I let it ride a bit. I used the same psychology. If you've been watching this channel, you know that we like oversold dumps that break a key psychological support level, give us a flush, trigger stop losses, give us a volume climax, and then the reversal and the bounce starts to play out. The same thing happens in the opposite direction. We have a bull move. We are overextended even though we're in blue sky breakout. I was very cautious on Ethereum because this 4-hour time frame was running without consolidating. So I knew that the risk to reward was fairly high. Look at this move that we had where we saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles in a row on the 4-hour time frame, none of which saw clear support established and a higher low. So that was a risk to reward scenario where I knew there was a lack of support on the 4-hour time frame. So I was going to be looking to exit my position into bullish momentum. So checking in on the 5-minute time frame, my psychology was, okay, if we break 14,000 or 1,400, we are going to see a potential volume climax. Maybe we'll get some stop buys triggered. Here was the volume climax where we hit 14,013, and that was right around the high. And I was exiting on the bull break of 14,000 or 1,400. I keep getting confused here with the Bitcoin numbers. So here are my my exits. I had a full position with all of my trading account in Ethereum from 1340. I exited 20% of my position on the way up right here at 1412. That was me just taking some off. I said that's a significant move. That's more than my goal for the trade. I'm going to lock that in case we do pull back from here. And so I locked that in. So there goes that. 20% of my position is gone on the way up into bull momentum. We hit our volume climax on the bull break of 1,400. We then started to pull back. I saw, oh, that's a pretty significant pullback. I'm going to be a little bit more cautious and take some more off. When you have the initial pullback after a big bull breakout, you see an equilibrium pattern form more often than not. So I didn't try and bail and market sell into, the bearish momentum and try and exit because I knew that no matter how far we pulled back here, we would see a decent bounce and an equilibrium pattern to form, and I would exit on the lower high that I anticipated to form. So here's this arrow on the way back up. So we bounced and we started to head back up. I exited 30% more of my position here at 1409, anticipating a lower high would form. So now I have a 50% position left, taking half of my profit at an average of about 1410, 1411. Then we saw the tightening range. So we had our high, low of consolidation, lower high, higher low, inside bar, very tight range. This break of the little higher lows and the bear break of this little inside bar is where I exited the rest of my 50% position. So I exited both of the first trades in a limit order on the way up, and I did exit the second half in a market order on the way down because I wanted to bail, and then everybody started bailing after that clear bear break because it gave us a 5-minute lower high and lower low. So I am now back to all cash, locked in all of my profit above 1,400, and I re-entered on this dump. I saw, wow, that's a significant dump. We pulled back. Now I'm looking for a higher low on the 15-minute time frame. And it might take me a little bit to find it here on this chart. But so here was that pullback, and I said, that's a significant pullback. In 30 minutes, we just gave back about 2 hours of bullish upside. So I re-entered 30% of my position at 1371. And then anticipating an equilibrium and a lower high would form, I exited on the way back up at about just under 1,400. I could have held a little bit longer, and we did actually hit a new all-time high just barely, essentially a double top before pulling back. But my game plan was the same thing on the 5-minute time frame. I'm going to look for an initial bounce. I'm going to look for a lower high to form and an equilibrium pattern on the 15-minute time frame. So I'm just going to lock my profit and get out. So I locked in all of my profit. I reloaded a decent amount and then sold again for more profit. And then I was back to all cash, and I said, all right, I'm not touching anything. Actually, I take that back. I do want to highlight a mistake I made because I did get a little bit of greed, and I re-entered right up here for the bull break of the new all-time, which we did get, but we saw no continuation. So I exited with market order at break even, and that cost me profit, just the fees, but it was a wake-up call where I said, oh, I just acted on greed, and I need to take a step back. So I was done with Ethereum for the day after that. Very small loss, only the fees, so fortunate in that regard. But I did catch myself being a little bit greedy, wanting more after such a successful exit, re-entry and exit, and wanting some more. So I was done with Ethereum after that, and now we are watching the exponential moving averages on the hourly time frame to see if they can become support, as they have rejected the price 4 hours in a row. Checking back in on NEO. So NEO is in blue sky breakout mode as we speak on the weekly time frame, extremely strong. Because we have run 3 weeks in a row, speaking of inside bars, look at this beautiful weekly inside bar breaking at $78, and here we are $100 or 100% higher, essentially, on that weekly inside bar bull break. So we've run 250% essentially in 3 green weeks in a row. That has me very cautious. When's the last time we ran 3 weeks in a row? It's never happened, at least on this chart, as long as TradingView has been charting NEO. So that has me very cautious at this point, even though we are in blue sky breakout. This is a scenario where I would be walking up a stop loss, or I would be taking some profit on the way up and being very okay with leaving some money on the table, because again, my goal is to not make all the money. My goal is to continually lock in profit every day and live a comfortable life. So here on the daily time frame, NEO had a bull break and we saw nice follow through. Our support level on the daily time frame is this low of 99.94. That is our higher low on the daily and our must hold level from here. We are literally at the all-time high right now, so the bulls are still in full control. The 4-hour time frame, our most recent support is right here. That's down at 132.52. So you can see that depending on how much wiggle room you want to give, that's where your stop loss is going. If it's the daily chart, you're using just under 100 psychological. If you want to keep your profits and not risk that much, you're using the 4-hour time frame. Again, this is a bull flag. That's a perfect example of the bull flag. Let's look at Bitcoin on the weekly real quick. All these lines are cluttering up things a little bit after all that drawing, but you get the general idea where it's not the same looking chart, but you can draw the same parallel channel, very similar. So it's worth keeping an eye on that potential for Bitcoin to be a weekly bull flag. So it was a bull flag on the daily or the 4-hour time frame for NEO. Nice increasing bull volume with the new all-time high. Let's see if we want a closer support level. We're using the hourly consolidation low here of 142.49. So all depending on where you want to put your levels, how much wiggle room you want to give, that's where your stop loss goes. Inside bars on the hourly time frame broke bullish at 152, and here we are up at 157, another couple percent move to the upside. But again, personally, I would likely be using the hourly time frame for a stop loss level. And again, you don't have to exit your whole position at once. If you want to just be protective, like I did with that Ethereum trade, I locked in 20% initially, then 30%, depending on what the trading does and the information that you get. Every minute you get more information. So I personally would at least put a portion of my position with a stop loss level of 142.49. Let's say I put half there, and then I put the second half at that 4-hour level down here at 132.52. So that's where we stand heading into tomorrow. It's all about inside bars on the 4-hour time frame for Bitcoin and Litecoin. Ethereum, it's all about the hourly exponential resistance and whether or not the bulls can form an hourly higher low and higher high and try and make their way back to the all-time high after healthy consolidation. The daily chart is still in a higher low pattern, so Ethereum is still the strongest name with way less resistance than any of the other big three, and the bulls continually buy the dips with significant bounces. Look at this bounce here where we just went from 12.56 and next thing you know, a couple hours later, we're up at 13.38. So that's a nice $70, $80 bounce in just a few hours, which are significant percentage gains. So when I see people say, oh, this is a really boring day or boring week, and then I look at this chart and see Ethereum just bounced. Let's see, how much is that? 70% out of that, or $70 out of 1,200. We're talking, 5-6%. The fact that you can get a 5-6% move in just a few hours tells me that this is still a very volatile market, and there is going to come a time in the cryptocurrency space where a 5% move in an entire day is a big move. And again, we want to see this. If we want cryptocurrencies and cryptocurrencies to be adopted for real life usage, we want to see this volatility stop. If we want to continue being day traders, we want to see it keep up. So we have names like Microsoft stopping cryptocurrency and Bitcoin acceptance because it's too volatile. And that's going to be the case. I personally don't expect Amazon to accept anything that is this volatile. We're going to have to see them create their own cryptocurrency that is not this crazy, or we're going to have to wait until this cryptocurrency market continually significantly slows down to have real life usages. If I'm standing in line for a coffee, like everybody says that Litecoin could be used for, and the difference in the price of how much LTC I have to pay for a coffee differs 5% in a 30-minute or an hour time frame, that is way too volatile for these merchants to be using it. And again, that's just my opinion, but it goes hand in hand. If I want blockchain and cryptocurrency to change the world, I want this volatility to slow down. If I want to keep trading and having a great time of profits, I want it to keep up. You have to decide whose side you're on, but we really don't have any effect on that, so just play it as it comes. I appreciate you all watching, and we will see you soon.